Okay, good morning, everyone. I got 1 minute. I'm trying to finish writing my daily plan. I don't think I'll get it done. I have it almost done. I got the levels and lines. I got basically the roadmap. Got to put finishing touches on it. But we'll be doing that together. We get to write our daily plan together. Isn't that cute? Okay, so that said, let's get the screen share ready. Hold on. Let's get this ready. Let's get this ready. Present, screen share, entire screen click. Okay, it's now 8:30, so it's officially good morning. Okay, good morning, everybody. And as I was muttering before to people that are here on the stage with me, late start. I have my daily plan almost written. I got cobbled pieces I got to put together and have to integrate it. So we all get to write a daily plan together um, as a group. Isn't that nice? Okay, so as I always like to do, quick review of kind of where we are, sort of from just, I guess we can call it a TA point of view, or price level, whatever. And so, again, pretty clear. I'm pretty sure most of you that are looking, watching this, kind of know how to do this. But just okay, levels of interest: 6350, that local double bottom area from how long back was that? I guess that was a late August kerfluffle. Then we had, oh yeah, that was like some bad PCE, CPE, elemental P, whatever, alphabet soup readings. And then bottomed out here, then Jackson Hole. So the numbers are 60, 6350, 6360 has been a level. Then the Jackson Hole breakout at 6380-ish. We took out 6400, went to the Moon Alice, all the way up toward 6475-ish. Uh, didn't break 6400. That's been holding. Had a couple of double bottoms, but this 25, 30, 35 area throughout all of last week or a lot of last week, there were a lot of large put sells coming in, kind of in that 15 area, 6405 area, 6395, kind of depending where we were, kind of creating cushions around that area on the bottom. I think the highest one we had was 6435, and that was kind of on the day where it was on this day here, and the 6435 held. There were like 20,000 contracts there. Um, I trusted the data, and I held on to my short put credit spreads, and we kind of double tested that area, 6440, 45-ish, and here we are again right at that same area, the 6450 area. So these are levels of interest. I didn't have a chart to do my TV string, so this is kind of an amalgam of some of Mentor Q's levels, which I kind of supplement, tweak, doing my own thing. Um, and so here, as you can see, the IC whale is back. There he is. For those of you who don't know, the IC whale, actually, was on TV yesterday here, is a large, I don't know, retail-ish person who also has a small hedge fund, who employs a martingale strategy. We know what he does. It's not as, it's well known, so to speak, in the industry. If he loses, he doubles up the next day using a martingale progression. It's not always double, there's a progression. There's different martingale progressions one can play with mathematically until he wins or goes broke. He hasn't gone broke yet, but he's come close a couple times. Um, and yesterday was an outside day. We went beyond the expected move, and that's usually the signal for him coming in, and here he is. And so where is he? He's at 63, 64, 45, 50, and 64, 75, 70. Gotta move this down. 64, 75, 70. He's over here somewhere. Okay. You guys see the whale? See the whale? That's where he is. So obviously the top is closer than the bottom, and I'm going to jump around a little bit. We're going to go back to some other to some gamma and that kind of thing in a minute. Before we do that, I'm going to just shift to over here because I haven't looked at this yet myself. So knowing the ICOL was coming yesterday, and again, I did this, as I like to say on TV, I did live broadcast. You can go look on YouTube yesterday after pinball. I hung around and did this. Eventually, this won't be done free after pinball. This will be done for the, I think the tier is platinum subscribers. Um, these September 3rd. Okay, so here they are. So I usually like to go a little further away than he goes. So I sold 75, 65 on the bottom, and I went further away on top, 60, 60, 60, 65, and then further away even more, 63, 64, 80, 6,500. So that's kind of where those levels are. And so for me, 6460 is the level I'm thinking about. I don't know. I don't think we get there, but we'll see. How am I going to determine if we get there? Well, let's see. Okay, while I'm in the neighborhood, because like I said, my daily plan, I'm still kind of writing it up. Expected move about 30. And I don't buy it. I mean, maybe I don't buy it. So let's look at ES expected move. 25. That sounds more like it. Good morning. 25 sounds more like it. Okay. So looking at E-mini expected move, the SPX chain doesn't always update great. So 25 expected move. Let's get back to here. So where are we? We're, let's call it 30, 35-ish. So let's just say 30 and 25 is 55. Kind of right up here would be one expected move area. And if we're at 30 and 6400, 6405-ish, another expected move area. So, down here. So here's kind of the playground that we are supposed to play in based on the options market. A little bit below 6,400. I mean, a little bit above 6,400, and a little bit below 64, 55, 60, and that skewers the whale. Does he get harpooned? I don't know. I wish him all the success in the world for him and his subscribers. However, from a selfish, so to speak, point of view, when he gets skewered, then he comes back double the next day or more, and then you have some really solid levels to trade off of. So it's kind of fun when he comes back two or three times in a row and there's like 30,000 contracts. Might not be fun for his people in his hedge fund or his service subscribers. He charges like $5,000 a year to get these trades. My elite people will be getting similar ones, safer with a different way of managing them for $99 a month. So I don't know, $9.99 a year, so $1,000, $5,000. I don't know. Sounds about right. Okay. Anyway, That said, let's get back to over here. So here's gamma. Here's what we got. 63.75, 64.45. Other than that, pretty thin. Free to move around the cabin. Don't torture the data. I've got a kind of daily plan written up. It's pretty much based on just kind of TA levels and inflection points, whatever. There's really not a lot that the zero DTE can inform us. We're kind of free to bounce around in here. So I also mentioned in my note, and mentioned it yesterday, and will continue to mention it, that we've increasingly been seeing intraday trades set the edges and kind of determine the flow of the day. And so let me go to a different view and we can kind of illustrate that. Hold on, let me do my dashboards, this one. Okay. So here's the IC whale. So let me tell you what I mean by that. What I mean by that is somewhere near the open, and the data we get is like 10 minutes delay, so I won't see it until 9:40, 9:45. I expect, don't know if it'll happen, but it's been happening for weeks now, to see 5,000 or more iron condors come in somewhere. Let's just pretend it's going to be 63.90 on the bottom, and let's pretend it's going to be 64.70 or 65 somewhere up here on top. So I picked the 60 to sell because I saw this yesterday. When I'm selling it, he just sells delta with the spread, very mechanical. I'm going to use discretion and see where I got protection. I'm not going out without protection. I want to have gamma protecting me. So as you can see here, if we can get over the 64.50, there's kind of a little path up, at least towards 60. We have a pretty big negative gamma node here, big enough. Negative gamma magnet, market makers hedge in that direction, fuel to the fire. But it's contained within these two containers, so it's kind of like we have this little firebomb inside these containers. And if we're above 45, we will tend to drift back toward it. And this would be a possible pin should we go up there. But getting back to what I was saying before, we tend to get, and we will likely get, trades all in here. It looks like we had a little update. All in here, buyers and sellers of calls and puts in here that are going to shape the direction of the day. We could, again, theoretically get more buyers of the 64.50 or somewhere here, 40s pulling us up. We could get put buyers who don't like this rally or whatever you just think that we need to continue down and test the gap at 6,400 for whatever reason, and buy puts down here. 800 is a fair amount, but not a ton. Can easily be put buyers down here sending us down. So we won't know that until the day unfolds, and we often see put buyers, let's just say hypothetically, come in at 6,400, and then let's just pretend they do that in the morning, and then by 10, 11 o'clock, that trade has run its course. They're losing money, they monetize, and then opportunistic call buyers come in up here and back and forth all day locally where we trade. So we know where the edges are. We know that as time passes, they exert more influence, and that this trading is going to go on locally, and we have to keep our eyes on the intraday data. And thankfully, we get that through options depth. And right now, that's a feature for all paid subscribers. I think that's going to go behind the paywall, a tier level at some point. Or somehow parse that out. Um, okay, so now that we know that we have these levels and maybe we could go above, I'm writing my daily plan here. So if we know that if over 64, test fail, if we go through, expect a path up to 64.60, stall, reverse, magnet down to 50, sticky this area. If by some miracle we get above 64.60, right now there's really not a lot other than general gamma glob up in this area pushing us down. Green is market maker long, pushing us down. For tomorrow, not much going on. That's especially it's going to influence today, other than the 63.90 at the end of the day. If this is still here and we're in the area and the 60, this could exert a little bit of a downward influence. For NFP day, remember Friday is NFP day. Not a lot there. We have some negative gamma, we'll call it, magnetic attraction towards 6,500, and we kind of have a path up there, but it's a skinny path. Don't get all excited. Other than that, there's not much going on. We have a little bit of vol selling all the way up here. I'm not sure what this way out of the money stuff is. Could be part of some other fund. I used to track them. And I did recently. I guess haven't gotten around to it. There's only so much that I can do. 6,600, by the way, and this will probably be in my weekend note. I guess I don't know where to put it. OG guru Larry McMillan has his modified 4 Sigma Bollinger Bands. And what it is, briefly, is a Bollinger Band, but it's based on percentage of volatility, kind of using a Black-Scholes model rather than price. And long story short, that's where the top of his Bollinger Band is, where we should get to, where we would then be extended and what he would expect, whatever his rules are. And I have that written down. It'll probably come out in a weekend note. So I guess no 6,600. Not saying today, not saying tomorrow, not saying whenever, but that's a number to be reckoned with. There's math behind that number other than it being a round number. Okay, so now from here, in constructing my daily plan live and in person, what am I thinking about? Let's take a look at gamma. Okay, first thing I see. Let me zoom in a little bit. Okay, so 6,500. The dark blue is market maker. The blue is market maker positive. Gamma, mean reverting, and as I like to say every day to explain it, mean reverting. As we go up, they sell, but as we move away, they buy back. So they go opposite the direction. On the and the same thing if we're doing it from the opposite direction. First thing a few things catch my eye here. One, very light color. Not a lot of hedging required. Free to move around the cabin, like I said. Good morning, Boomer. Just saw you. Free to move around the cabin. Also notice the x-axis here across the bottom horizontally is time. And although 6,500 is not really an issue today anyway, just let's use that to illustrate the point that gamma is dependent on how close spot or the price is to a level, and the rate of change of delta, and time. So as time marches on, the levels become more influential. So let's just pretend again, hypothetically, we were at 64.80 at 10 o'clock. There'd be some suppressing effect, but we could get through it, maybe. But if we were at 64.80 at whatever, at 5 minutes to 3, we ain't getting through it. Time dependent, assuming all the other variables stay in place. And so what this heat map tells me is kind of like my other, like I said, there's nothing to say. There's really no clear levels here for today. And the reddish, the pinkish U implies small negative gamma clusters. And so what does negative gamma mean? I have another bone to pick with people. I was on a chat yesterday, I think in Financial Juice and Discord, whatever, one of those like newsy chats. And of course, people are pontificating about the market and their trading, whatever. And somebody puts up like a naive gamma kind of picture. What do I mean by naive gamma? Naive gamma is in its most base form or most abused form, take the open interest at a strike, apply the gamma formula, multiply it, and you get a number, and you make bars. Well, that's having some flawed assumptions. One, that what you see in open interest is in the market maker's book, because this is not time for a class, but just a quick explanation. A tad overstated for the sake of exposition, for teaching. Let's say I buy 5,000 calls at 64.50. Bought them 3 days ago. They're open interest, 5,000. Boomer sells 5,000 calls at 64.50 the next day. They're still open. 5,000 more open. 10,000 open interest. How many does the market maker have? Zero. So, coding open interest as whatever is wrong. That's why options depth gets CBOE data, and a few other people do. That's why I know that this is the actual number. Plus, there are some contracts that are not exactly that CBOE doesn't have. That's another story, but that's basically going to be the number. And furthermore, they also code it as every put is long, every call is short. Does that really make sense? Or every call is long, or every put is long. However they code it, we know people buy spreads, people sell spreads, people do butterflies. And so when someone said we are in negative gamma because we broke 6,400, I got into a little discussion with the person. What we can say and what we could say yesterday, when there was 20,000 contracts at 63.45 that was sold, we're just going to pretend that's here. What we could say was that when we were at 63.60, market makers' gamma exposure, they aren't in anything. Their exposure was positive. They were exposed to positive gamma down here. At some point, if market makers were here, their exposure in this range would be to negative gamma. They aren't in anything. They're exposed to gamma locally. And yes, there's broad gamma calculations, whatever. But I think that's a naive way to look at it. It misses the nuances, misses what actually happens. Okay, anyway, I'm off that rant. And so, what else we have? Oh yeah. How can I forget? And I haven't had a chance to evaluate this yet, so we're going to do this together. Oh, let's go to this. The famous VIX-VVIX ratio. 6-ish is considered, you know, normal hedged. 6.5-ish is normal hedged, a tad complacent. Almost 7. Now, as you see, we got all the way in December rally up to 7. The February rally, the all-time high, we got right around where we got to here when we pulled back. And, 6-ish is a healthy level. But yesterday, during the sell-off, we got to 5.5. 5.5 is in the normal range, but overly cautious or very cautious or well hedged or not quite backwardation, but getting there. Backwardation is when the short term is vol exceeds the longer term vol. And so that was another sign that we had gone too far too fast yesterday when we broke below 6 and got almost down to 5.5 on the VVIX-VIX ratio. Looking at my little volatility dashboard, you can see yesterday the 9-day VIX got to around whatever it is, 19, a little over 19, and the regular VIX, the 30-day VIX, got to 19.27. There was about a 0.10 difference between them, almost backwardation, basically flat. That's typically not healthy. That means either we're going to go into backwardation, we're going to have something like we had in April or a really shitty week or two, or it's too much. Obviously, it turned out that it was too much for now. Similarly, along with that, VVIX, volatility spiked to 108. We're still over 100. That's still kind of high. Interestingly enough to me, let me get a better look at this. I guess in terms of perspective, tail hedges were bought 3 standard deviations, but not as much as the 1 standard deviation. The normal hedging seemed to be more in demand. This is 1 standard deviation out of the money stuff. Let's take a look at vol I just to complete the thing, which is at the money volatility. Now, what can we say from this pattern? What I'm willing to say from that, unless I had percentages and stuff, I really can't say much. Looks like at the money volatility. I mean, the pattern does, let me not torture the data. The pattern doesn't say a lot. Maybe if I had time, I'll go back and analyze it, but I don't really have time right now. So that's that. Let's get back to over here. And since we have a few minutes, I want to talk about a few other things real quick. Apple. Apparently good news about the antitrust suit. That certainly helped the market action. We're kind of near a resistance level on the gamma thing here. It sure looks like a local high. Own it, don't trade it, as the much maligned Jim Cramer says. Own it, don't trade it. Oh, look at that. Is that an all-time high? No, no, we were up to 60. As Let's make it a 30-minute, because we're going to look at a few different things while I'm in the neighborhood. And we've been doing, we have some earning trades that we're doing. We have unusual whales. I and some stock trades. I do a few of them. My time is on SPX, and if I'm not trading it, kind of like sniffing around the tea leaves or trying to see what's going on. Um, However, Dan is putting some stuff in for us based on volatility, based on different secret sauce. So anyway, so that's Apple. Okay, now it was an antitrust suit related to Google. And Google, that's probably an all-time high. I'm pretty sure where it reached. I'm pretty sure that's an all-time high in the overnight session. So, so that's what's going on in tech world. So let's take a look at the Qs. Qs have room to run. Qs have a little bit of room to run. Should we continue to run? Qs have room to run. Zscaler reported yesterday. I like trading the cyber stocks. They're juicy. We were trading Zscaler, when was it? Earlier in the year, if my memory serves me well, like all the way down, like in like below 200 level, looking at 200 as our pivot. Okay, so clearly there was a positive reaction in the overnight session. Now it's basically flat. Let's see how that spills over into the other cyberspace. Pan W, where is it? Palo Alto had that earnings sell off. I bought it. I sold puts. Here's the earnings sell off. This one, I like the name. CrowdStrike's another one. Not investment advice and all that bullshit. CrowdStrike's another one. I'm not so sure about what to do with this one. I'll stick with Pan W for now. And Fortinet. Fortinet's another one that got beaten up in that space. Kind of got a gap fill to deal with here, but that's not really a big gap fill. Here's what we got to deal with. So we got room to 95, 100 maybe. I don't know. Or depending how you like to trade. If over 80 or 81, then blah, blah, blah. Or if you want to McGraw it and front run it, you can get in there now or sell puts or, buy some kind of wide fly or something, however you like to do this kind of thing. Salesforce earnings tonight. I already have a trade in on it. I've had some. I did one yesterday. Dan put an earnings trade in based on volatility, usually some kind of calendar, double diagonal maybe. I didn't look. I guess so I put in. I didn't check it out yet. Personally, I don't remember exactly what I did. I did some kind of wide fly. I was going to do a 1-by-2 ratio, like a 75 long, 63. 325 short times 2 or 3. If I played with it, I didn't like it, so I did like a wide fly. I think broken wing with 70 the long leg, maybe a 30-by-20 or something, and then I'll play with it from there. If I'm assuming that people know what a wide broken wing fly 30-by-20 means, that may not be as automatic to some people as to others. Anyway, I'm gonna. Oh yeah, one last thing. IWM. I'm gonna let the bad hombre take the stage. IWM, heavy short interest. Ah, my buddy. Haven't seen you for a few days. Um, IWM. I just took my eye off the ball yesterday. We had this nice sell off in IWM. I wrote an article about it over the weekend. I had meant to get into it. I was just doing too many things, so I'm going to see if I'm going to get back into it. Now, it's speculative. Non farm payrolls, if it comes in the way some think, and Fed rate cut, et cetera, et cetera. This thing hasn't made a new all time high for like 968 days or something. So maybe it's due as a K-Clip trade. So anyway, that's it. Say good morning.
Hey, good morning, everybody. First off, I just wanted to say anyone that needs access to the Trading View indicator, I'm going to put a message in the Discord. Just go ahead and type your Trading View username. Don't fill the message with other stuff, and I'll get you access here shortly. In terms of today's price action, I'm seeing a little bit more of a sideways day. Didn't really get to hear what your thoughts earlier, Doc. So sorry if I'm repeating anything, but I'm seeing a little bit of sideways action. I think I'd like to see some down movement first. And here I'm talking ES levels around 640 or 440, I'm sorry. Then when we get down there, I'm going to be interested in some upside movement. But besides that, I'm not expecting huge plays.
So that's about 10 points down from where we are now.
Yeah.
And I'm sharing it on the screen here. So I'm sharing ES on the screen for the people. I don't know if you can see it.
Great.
And so go ahead.
I'm going to be the way I kind of tailor my trading for days like this is I take 90% of my profits at my first trim, and then I try to move a stop in profit, see if I can get anything without expecting, over, 20 points or anything like that. So just nice little sideways movement. I think we're setting up for some big breakout trades here in the coming days.
Yeah, and that kind of makes sense to me. I would be surprised if we don't see 6,500 sooner rather than later. Also, wouldn't shock me if we hit 6,400 and, maybe retested this recent low, although I kind of doubt it unless numbers come in bad, unless there's an excuse. And there's always that macro noise. Yes, yesterday was a big macro noise sell-off. English rates or something hit the highest in 27 years, which spilled over into FX. Foreign exchange, which spilled over into the dollar and gold and whatever carry trades are on with bonds and, and then the macro bond yield allocation, sell E-mini and buy whatever, all that stuff was going on yesterday. And so, there's always that can happen. Also, we have Xi meeting with Putin and Kim from North Korea. What could possibly go wrong with that? We have gold, right? Gold predictably made a new all-time high yesterday when the safety trade, I don't know, that's pretty parabolic. The parabolic safety trades, if that's not an oxymoron, I don't know. Let's take a look at this. I'm kind of curious to see what a daily, I wouldn't even dare to put a weekly on. So here's a daily chart of gold. That's actually controlled parabola, so to speak. I have a March fly on in gold, wide fly. I think it's 25, 50, 75 or something. Wide fly. They just kind of get the upward drift. I put it on when we were below 25, so now my long strike is just slightly ITM or ATM. And maybe I'll take it off, maybe I won't. I'm not married to it. I don't like to get married to my positions. And so that's basically it. Any questions? Okay, so let's look at, like I like to do, how would I trade it? Well, I know there's not a lot of data, so to speak, in terms of, um, from a price action point of view, our ES person is seeing basically a consolidating, kind of choppy day. Statistically, after an outside move like that, we tend to kind of consolidate and poke around and find a range. And Gamma is telling us the same thing. There's really not a lot of positioning here. The free to move around the cabin zone is 64.30 down to 64.15, 10. So from where we are, 10 or 15 points in either direction makes sense. So I'm going to wait to see where the vol sellers come in, the iron condor crew comes in. Typically 5 and 10 wide, they target about 50 cents, 25 cents a side. Um, Now that's a decent percentage on their money. Yeah, they risking whatever it is, 10 to 1 risk. Yeah, but they've never gotten hit. So do they have an algo that weaponizes the gamma? They know they do X thousand contracts. We ain't going there. I don't know. We'll see. So where would I go for today? Well, to me, the IC Whale 75 looks like a nice level to sell. I'll put in one. And, you could probably do, if you like a 5 wide, I don't know how much you like to get for your 5 wides. Maybe you could do something like here or 10 wide, try to get 50 cents, something like that. So that looks decent. On top, the juice bar, you have to go, you can go all the way up to 80. There's a little juice up at 80. 50 cents, I like that. I might add to that. 64.60 is supposed to hold. I'm not thrilled with it. It's a 22 delta. That's the expected move now. So he sold the expected move yesterday at 45, which was the expected move when we were 20 points lower. So yes, you get the extra theta of the overnight, so to speak, but you're running directional risk. So we'll see how that plays out. So that said, and giving the potential pinfluence of his trade and giving him the benefit of the doubt, saying we don't break through the 45. Let's just give him the benefit of the doubt. Well, this looks pretty good for 40 cents. If I wanted to go wider, well, I'm short the 50, but a 40, 50, 60, $1.55 if I wanted to go wider. Or if I was a tad more bearish, I might do this for $1.45, something like this. As a placeholder for fun, 45 cents. I'm there. The downside, let's look to the downside. To the downside, I don't really have a great marker. You might say 25.20, I don't really, the close was 15. I don't, I guess be making some shit up if I'd say 20, 25 maybe. Let's see. Just for fun, let's just kind of see what something looks like on the put side. 15 cents. All right, for 15 cents, I'm always in the game. 70 cents, I'm not. For 20 cents, I could be a sport. There you go. Now, I do this kind of thing. Most people don't. I don't mind throwing this in for $15, and it's well, it's a Starbucks and one of those egg white bites. Starbucks and egg white bites breakfast. And you can get out for $10, or maybe you can even make a couple dollars. And there's nothing wrong with doing these 10 wide. Gives you a little more flexibility and room to play. I'll typically do that in my other account, my real account. Pretty much when we open, I'll do at least one or two 10 wide flies, or 10 by 15 or 15 by 10 somewhere. And typically, because with intraday movement, you could buy one. Like I bought one yesterday, I don't remember, for like around $2 and got out for 260 or something like that. If you buy them wide enough and you place them good enough, there's usually enough up and down intraday movement to get out at a profit, even if you're wrong on direction. And if you happen to hit it right, then you make a nice trade. But it's, informed by something. Like I said, is the only real information that I have is where the icy whale is. Okay, it's 9:15. I've babbled on long enough. I'm gonna go and see what Valsix has to say, and get ready for the day and get my note out. I have it kind of written. I have to put the finishing touches on it, and do my TV string, which will be thin because there's not a lot of levels. I might wait, put one out, and then put another one out once we get the levels in from the intraday trades. Okay, take care, everybody.